Okay, so let's start. Thank you so much for your time. Martin Sulte, you are the CEO of Mintos. First of all, maybe you can introduce you and the platform we are talking about.
Sure.
Yeah, in a few sentences to get an impression what is Mintos about and what you about.
So first of all, glad that you actually come here. So it's always a pleasure to have meet investors, especially who take the time to come actually down to the office. And I think it's a good idea always to visit the companies, obviously, and just to get to know the people behind. And we're super welcoming in that respect. We actually have investors coming from like Germany or other countries from time to time. So Mintos is really, we are building a global marketplace for loans. And what we offer to investors, the key sort of advantage, what I believe is like massive diversification opportunities. So on Mintos, we do have today almost 40 different loan originators who are originating the loans, and then they are placing them on Mintos, and basically they are available for investors to invest in. And it's anything from like personal loans, short-term and installment-based, up to small business, invoice financing, mortgage loans, even agricultural loans, car loans, so any type of loan actually, as long as it's a loan, you can be funded through Mintos.
So maybe I can just add one question to this,
Sure.
because there are a lot of different loans, and we also had this question before with Elmas, and it was very difficult to explain all types of loans.
Yeah.
And there would be a suggestion from Elmas, from me, and also from some of the communities. Maybe you can just put one page on the website where you explain every loan compact. Because you know, you are of course in it, you know everything, but we as investor, we don't know what kind of loan and the repayment. So just would be nice to have one overview.
Sure.
If all kinds of
that's a good feedback, and we take feedback.
Just for the investors to learn it. Yeah, that's the point.
And this is like a fantastic feedback, and in general, the feedback we encourage investors actually to give us feedback. Obviously, these days, so we receive like a lot of feedback, and then depending on where we see like the most questions come, so we're happy to work on that and improve the platform.
It would be made just easier for the investor to understand the system, I think. Yeah, and now we are at the next question. Of course, it was no question; it was just a suggestion. So, what is the average interest rate investors can earn per year? Because some, of course, of the viewers will know everything, and some are maybe just got to this video and don't know about it.
Like average in general is not a good number. Like in most of the cases, and also particularly in our case where we offer like different loan types from different countries, originated by different loan originators, and in different currencies. Having said that, so average which we have seen investors earning to date, net has been around 12%. Is like net.
So,
but that's includes like everything from very low risk, low yielding loans, such as say a mortgage which is backed by real estate, low loan to value, a loan say in Prague, so it's going to be like very low interest rate, but also very low risk. Going to a higher risk loans, which are also higher yielding loans, and in for instance other currencies such as like Georgian lari, which is going to be even like up to 18%, but it's unsecured loan, and it's in Georgia and in different currencies. So I think what investors, what we're trying to do is to educate investors to give them the message and understanding that the risk is very much related to interest rate. So the higher the interest rate, the higher the risk. The lower the interest rate, the lower the risk. And that's in general true across all the loans which are available on the marketplace.
So maybe that's an advantage of this platform, that you can just diversify on Mintos on its own and have really different kind of loans.
You can have super different from lower risk type of loan to up to like higher risk type of loan originated in different countries. different currencies, if you will, or by different loan originators, targeting different borrower segments, which you also have to take into account. That even if the loan originators are like both, for instance, or few loan originators working in the same country, doing the same type of loan, they might target very different borrower segment. And that's why, for instance, we just introduced finally, it took us for too long perhaps, introduced we showed the APR, the interest rate, which is actually charged to the borrowers, which represents like the kind of inherent risk of the loan, because obviously the higher the interest rate, usually the
there will
more
be a question about it later in the interview as well, I think. Maybe we can also talk a little bit about the different loans, of course, but maybe the repayment schedule. Yeah, is it all monthly or is it at the end? Is it per year?
It kind of depends. So it's different kind of payment schedules, and that depends on the loan type and also by the loan originator. It can be. Usually it's going to be fully amortizing, so most of the loans are fully amortizing, meaning that monthly payments is part of the monthly payment is principal and part is interest. Some of the loans, especially say in business loans, you're going to see just bullet type of loans, where the interest is paid every month and then the principal is paid at the end of term. Some which are like single payment, like short-term loans, it's just like one payment which includes interest and principal at the end of like a month or so. So there's going to be different repayment schedules, and that's going to depend on the loan type.
Okay, so but you put on the auto invest just generally, of course you can also put it in the auto invest with different methods, but so if you just put it on general, you will have a mixture of it.
And depending on the loan type.
Depending on the loan type, but you know, it's important for investors like me, of course, who some kind of generates income with this P2P investments to receive every month's money. Okay, so then we have from the Aktien mit Kopf community one question. I'm not sure if there were maybe more questions, so sorry to the members of the community if I lost one, but the post was deleted, so I could only find one. Yeah, and this was from Evi Regge. If an investor get a 10% rate out of it, how high is the interest charged to the consumer who actually has to pay back the credit? Of course, it's a very general question, I think, but anyway, you can say maybe some words.
So this is an interest rate which is charged to the borrower. So how the economics work is basically the loan originate the loan or issue a loan to the borrower at a higher interest rate. Then they have to cover all their costs and all this operating costs like people and so forth, and then there's interest rate which they offer to investors. So obviously there's interest rate difference, and the interest which is charged to the borrower is going to depend. And we just launched a few weeks ago that actually investors can finally see what is the interest rate charged to the borrowers. And that depends, of course, still some loan originators are still in the process of getting this information to us, but there's going to be like...
But Mintos is behind it and tries to get these figures.
I mean, definitely. And then the interest rate which is charged to the borrower is going to depend on the loan type by loan type. So it can be like even single-digit interest rate, and it can go up to like hundreds of percents on annual terms for very short period, short-term loans and small amounts. What I think is what we have to, and we also actually going to post a blog post explaining more about the short-term loans, how the economics work there, is that it might seem that the loan is originated at a very high interest rate and investors get just what they say like 10%. But what loan originators have to count that to get this loan, like marketing costs. So for instance, if you want to issue like a loan which is 200 euros, in marketing you can easily spend like even up to like 50 euros to get that borrower. So the interest rate which you actually charge is, yes, it's high, but the cost to actually get this loan, to service, to market, and then debt recovery is very high actually. Relative to the loan amount.
So maybe an additional question from my side, of course, in this case, I can definitely understand it, because for me as an investor, for me it's important that there is enough difference to secure the buyback, of course, and the payment, because these loan originators have to work profitably, otherwise there is a danger on our buyback security. And now my additional question, does Mintos also take care in the due diligence and so on if there is enough spread between the payment to the investor and
definitely. So when we onboard any loan originator and before we connect and also afterwards when you do all the monitoring, so one part of the analysis is that we check also if the loan originator will be able to honor the buyback guarantee. So it's not that the loan originator comes and they, hey, I'm just going to provide the buyback guarantee and nobody checks. Actually, we do check the kind of economics. And the economics actually are quite straightforward. So basically there's an interest rate at which the loan is originated to the borrower, and then there's interest rate which is offered to investors or sold, at which interest rate is sold to investors. So the loan is that they do cover the marketing costs, so it's going to take quite a chunk. They're going to cover the operating costs, and they also do have the estimated default. And this estimated default is basically part of the interest rate spread. And if actually you look from the investor's perspective, so there are actually two ways. Either the investor gets a loan without the buyback guarantee, but at a higher interest rate, or they get the loan with a buyback guarantee, but with a lower interest rate. And the difference in those two interest rates is going to be actually estimated default. So the estimated default is something, a good proxy for the kind of value of a buyback.
Okay, so that's good for me to hear as an investor, of course.
And there's a net result, so actually you get the same. So either without the buyback, you would get a higher interest rate, sure, but then on portfolio level, you would also see some loans defaulted,
of course,
and net, you're going to get the same as with a buyback, where the interest rate is like to start with is lower, and the default stays with the loan originator. But the default, like, obviously, the only difference is where the default is.
Exactly. It's like an insurance works exactly. At least.
So in finance terms, actually, how you can call it is actually credit default swap. So it's basically investor is paying to loan originator this spread to basically sell the credit default.
Okay, yeah, perfect. Thank you very much for this explanation. So maybe we proceed to the next question from my friend Tuan. He is the blog owner of Finanzpolster. Maybe you know this website, and he is also a member of Financial Independence Table in Vienna, where we always meet every 2 months, to talk about investments, to talk about financial freedom. And there will also be found, of course, an interview about my Baltic trip on his blog, in the next weeks. But Tuan asks now, when will you reach break-even? Of course, it's a very general question to all platforms. And I already heard you were profitable last year, but maybe you want to take care about this question a little bit.
Yeah, so obviously we are at a very early stage. So as a fintech startup, so at this moment our focus is really on growth. However, we believe in sustainable growth. So we check our kind of profitability, and we believe in profitable growth at the end of the day. So we don't believe in just going and growing as much as you can and then trying to find a business model someday later. So we actually have been profitable ever since January 2017, and we continue being on a monthly basis now. But obviously at this moment our focus is really on the growth, and we are happy that we can manage to do it on a profit, like to do a profitable growth. But it's not our primary target.
So 2017 was a profit, I think, at the
2017 end. We finished with a profit, and so far 2019 we've been profitable every month. Obviously now as we scale the operations, we hire more people and we offer more opportunities to investors and get more loan originators on board. So the costs increase, but we still.
So we will see at the end of the year.
But we expect that we're gonna close 2018 with a profit as well.
Okay, that feels good to us. The next question from Tuan is how do you evaluate the loan originator? Yeah,
so the evaluation of the loan originators is a big part of what we do actually. So behind the scenes, actually, before the loan originator is connected, actually we have done already a lot of work before, a lot of work in due diligence of connecting. So there are many things which we check, but the first and the foremost is loan performance, because at the end of the day, investors are investing in loans. So it's at the end of the key is what is the loan performance, and can investors earn risk-adjusted returns according to the risk they take? Can they earn respective risk-adjusted returns? So we're gonna check the loan performance, then and there we're gonna do all the cohort-based analysis. We're gonna check economics of the loan types they offer. We're gonna check what are kind of the payment schedules, what's been default rates before, and like many other things. And we're gonna have ask for a certain track records, previous experience in doing so. Basically, we want to be comfortable that the loans which are placed on the Mintos actually meet our quality bar, and investors are gonna earn like corresponding risk-adjusted returns. Then we're gonna do. We're obviously gonna check financials of the loan originator. We're gonna do the checks on the management. We're gonna check all the credit scoring procedures, debt recovery procedures, so a bunch of things actually which we do behind the scenes, and what investors maybe do not see is all the loan originators which we turn down. So many of them actually.
Okay, that's good to hear.
There's been quite a few which we do not allow to place, do not allow to connect to the Mintos marketplace.
Important to keep it like this, I think. Yeah.
And then, and because we are in so many different markets, and we know the loan originators in different markets, so we also can get a lot of like reference checks. So we can do a reference checks of like management, even like shareholders, and just to see that we are comfortable with what the loan originator is doing. So we are not trying to reverse engineer what they do. So we are not going in the like, specifics of credit model, but we're gonna check if the credit model works and has been working, and there's a track record. And then thereafter we're gonna do monitoring. So after the loan is connected, so we do a monitoring. So we have our tools where we see real time how the loans are performing, if there are any issues, like if there's like maybe increased delinquency, so we can stop placing new loans. We can inquire the loan originator and do it on a very much like real-time basis. Obviously, like financials we do on like a regular basis, and that's gonna also depend. Let's say we're gonna check the management financials based on the kind of risk rating, which internally we assign a risk rating to each loan originator, and we're gonna do monitoring based on this risk rating.
Okay, great. Then the next question from Tuanis. If you face...
Yeah, to finish on that, so basically we do have the whole team, risk management team, working just on that. So today we have 7 people who are just working on risk management. It's a big thing what we do. So 7 out of 40 in general, because we just talked about it before. Yeah. And it's just like risk management, and then the sales team obviously
exactly.
as well help there. So it's
perfect. Okay, so now to the next question. I think it's from Tuan again. If you face economic downturn, what impact does it have on your company and on the P2P market in general? What's your thoughts about that?
I think with any crisis, so the question is not if you're going to be impacted, but how much relative to other kind of asset classes or other things. So, and also just like a step back is that we as a people, we are like recency bias is something which you have. So some biases which you do have is that we think that the things which happen like just recently can happen also in the future, but in general as big crisis as we had in 2008, perhaps not gonna repeat itself like anytime soon, if at all. But
and you never know in which kind it comes, of course.
Exactly. Yeah? But still, in economic downturn, so obviously the key thing is that the borrowers would. So the question would be how are the borrowers able to service the loans and make the payments?
That would be the interesting point for the investor.
The unemployment goes up, the salaries goes down, productivity goes down, whatnot. So basically the question is, can they service the loans? I don't think that in an economic downturn you would see any like capital loss. So I don't think that the investors would lose the capital. But obviously we would see like reduced yields in this kind of lending business, and this is something which we've seen also in 2008. Actually, like if you look at the credit card data of the US, so even in credit cards still there was positive yields, so investors still were earning interest, but it was substantially lower than before. The key thing with any risk is managing it, and I think what we offer, this massive diversification opportunities, actually mitigates this potential risk of economic downturn quite a lot. Also in the 2008, not all the countries were hit the same. Say Poland actually, throughout the crisis, they still managed to grow and they never seen the decrease in the GDP. And likewise, today on our marketplace, investors can invest in 23 loans originated in 23 different countries, and it would be hard to imagine that there's going to be such a big crisis that's going to impact all the countries the same. And then there are different borrower segments, there are different loan originators. So as long as investors are diversified, I think that's the best of mitigating the risk, which is there. So definitely that the economic downturn would reduce the yields.
Yeah, I mean, you never know in which asset it might happen, because it can be on the stock market, it can be on the real estate, it can be on the loans. You never know in which kind such a downturn comes. But I think that this is one of the advantages, of course, of Mintos, because you can diversify even on the platform in different countries, in different kind of loans and so on. And maybe it's also interesting to discuss it a little bit in this interview. I talked about it at Pandora, of course. I had the same question, and it was interesting because they were founded in 2008, and they said they were the best years for them because they had in the P2P lending there was even a profit out of it, because more people went to P2P and they had more loans and better rate, of course. So
and likewise, like many of our loan originators have been actually in the business even for 20 years. So they've been through the crisis and so forth, and obviously they've seen that the delinquencies increased during the economic downturn, but still there's been a positive yield.
So this might be also an advantage of Mintos, because you have loan originators which are like 20 years in the business with experience. So different, of course. Okay, so maybe we continue with the questions from the community of the P2P-Kredite.com forum. Bolanga asks, can you please comment on your assignment rules on loans auto-invest function? So it means first come, first serve, or how do they do the loans to the investors?
So in auto-invest, so it's our proprietary, what do you call it?
No problem. I'm also sorry for my English, it's not our mother tongue. So
so auto-invest is really how we have built the auto-invest as our kind of intellectual property in that case. So we do not disclose specifically how it works, because so that none of the investors can actually game how the auto-invest operates. But in general, it's we try to take into account that it has an equal treatment to all clients, and they have equal access to loans as much as possible. Of course.
Any tip to get the loans first?
No, not at this moment.
Okay. Is it possible to invest? Yeah, the city, I think he also loves your platform, because he asks, is it possible to invest in the company Mintos? Is it possible to get shares of Mintos company?
So today we are not actively looking to do a fundraising. When and if we go out, so we might consider also doing such as other fintech companies when they do crowdfunding kind of equity raise as well, part of the
maybe you go to the stock market?
This is still super early. We are super early in our journey, so we are rather focusing on building a global marketplace for loans and bringing the best possible service to both investors and loan originators.
Okay, then Hen's question, I hope I pronounce it right, I don't know the name. Why do you not publish systematically audited financial information of the loan originators?
Sure. So this is another question which actually we receive quite a lot. And the key here is that it's not us who are publishing the reports. So we are very much on all the information relying on the loan originators. And as much as we would want to see, so likewise as in any investor, we would want to see I don't know, even management reports on monthly basis, but that's just technically or practically not possible. So we rely on what the loan originators can provide and do provide. And there are many things which we have to take into account. So say some loan originators they have a bond issues and they are listed, bonds are listed on stock exchange. So actually they cannot really publish any report before they have published it on the stock exchange. Some countries they basically do just like annual reports and so forth. So many different loan originators at many different kind of stages, and we definitely publish everything which we get from the loan originators, and we push them to publish. But at the end of the day, we are only can publish as much as the loan originators are sharing.
Okay, I see. So you try to do the best, of course.
Of course.
Yeah, and give as much transparency and information as possible.
Course. And as, of course, also all the loan originators are like some are like younger companies, some are more established, some have better corporate governance, some have maybe less, but we definitely do our best.
And I think the team of Mintos watches very closely and tries to be on it. Okay, then questions I got by messages, for example, from Katja. I think it goes to your experience as a CEO as well, and general. Katja asks, what are your expectations regarding the future next 5 years of P2P in general?
I would rather, so how I think about the P2P is another subset of a much bigger industry, which is alternative lending industry, or some call it digital lending industry. So what we see is actually that or the non-bank lending industry, if you will. And what we see is that the overall, and it is here and it's going to continue, that the alternative lending space is taking more and more of a lending instead of the bank lending, and I see that the trend is towards the result where the bank's gonna remain only with very kind of specific lending types, and I think the bank's gonna remain in mortgage lending, definitely, like long-term, big-ticket mortgage lending, in blue-chip corporate lending, but all the rest actually going to be more and more we're going to see from institutions outside of the banks, and it not only like fintech companies. Say, who knew that Amazon actually today is one of the largest small business lenders? So Amazon itself are lending to small businesses on their platform. And we see this trend more and more, and thus I was also going to include the P2P. But P2P is just like a subset of alternative lending space, and P2P, how we define P2P is that basically that they are still loan originaters, but then instead of keeping them on balance sheet, they put on their platforms and sell to investors. Whereas there's many more like loan originators who are using Mintos now, who are actually balance sheet lenders, and they've been lending for quite a while already, but you would not technically call them P2P lenders.
So a good future in a big market for P2P in the next 5 years.
I definitely see that, well, in general, I think I like the saying that as people we do overestimate how much is going to change in 2 years, and then we underestimate how much is going to change in 10 years.
Yeah, I think so too.
I think that we're going to see definitely a lot of changes. Maybe they're not going to happen as fast as we think, but in like 5-10 years time, I see that there's going to be alternative lending companies going to take over all the consumer lending. It's going to be much better consumer experience, customer experience for consumers, small business lending, invoice financing, like most of the lending where the customer experience plays a lot of role.
I think exactly the same way, because for example, if I talk to just my friends around there, they say, okay, so many people are in P2P, and how will it continue? And there are too many people. I say, yes, because we talk about it, but there are so many people that don't even know about P2P, that 100%. There is a really, really big market ahead.
I mean, it's still very, very early. So if fintechs talk in millions, banks talk in trillions. So
exactly.
Like
so there is
like huge issues. So it's just a very early stage.
And the other thing is that fintech is just and P2P. It's just smarter for both sides, for the borrower and as well for the investor, because you must say there is not a big bank building with hundreds of employees and so on. It's expensive. Then at least most of it is an intelligent software. Of course, we need people behind, and we want to know the people behind, of course, and they want to talk together still, But at least most of it is online, most of it is very smart and works very properly with software which is at least cheaper, So then she asks about your company, including future plans, hiring employees, spreading to other loan originators, countries, and so on.
So we are very focused on building a global marketplace, and that involves both sides, investors and investor demand and loan supply. So we are working on both sides and making our service better for them. So when we talk about the immediate future plans, so we definitely see more loan supply coming from different geographies. So now we have covered more or less like Europe. We see a lot of potential in Latin America. So we already connected first loan originators from Colombia, from Mexico. We are looking in Brazil and Argentina. Africa is definitely a very interesting market, and Southeast Asia as well. So we are very much focused on building a global marketplace and bringing the wide offering of loans to investors and offering better product investors. So I'm not sure like exactly, but it's going to be in the near future we're going to launch also long-awaited the secondary market auto invest, and we're going to add many other features along the road so that investor experience is better.
A lot of plans, of course, for the future, as well as I think you told me before, in the elevator you will move to another office because there are more employees and it's getting small. That's the reason why we are sitting now down here and not in the office, because everything is busy, every meeting room is booked at the moment.
Yeah, so today we are about 50 people all in all, so we have an office, 50, so we are in the office here in Riga. We do have people in Poland, we do have people in Mexico, but by the year end we expect that we're going to be closer to 80 to 100 people, so we're going to double our headcount by the end of 2018 most likely.
And the office will be in this building again?
We are actually just building a new brand new office or brand new building, so now it's an exciting time. So we're designing office from scratch, and we're gonna take the whole floor and the top floor of the building.
I hope you don't mind if I visit you again when it's finished, because I'm really interested in it.
It's going to be a great office, definitely.
Great, super. When will it be finished, you think?
I think it's April 2019.
Okay, so next year, in 1 year I can come back.
Yeah,
perfect. Okay, then the next question goes to the Baltic economy.
Yep.
What do you think about the next 5 years future of Baltic economy?
Baltic economy is, I mean, they are small economies, right? So you have to take into account that, and there's, in general, what we see, it's been steady and slow growth after the crisis. So we were hit by the crisis quite heavily, but ever since it's been slow and like steady growth. And I think the future we're going to see kind of the pace is going to continue and the economy is going to grow. And you see it everywhere. So if you look in Riga today, like construction is actually very active again, and it's a lot of activity going on. However, what we have to take into account is that we as Mintos, we do sit here in Riga. We're happy to sit here, but our business in Latvia or the Baltics is very limited. Actually, most of our business is very much in, say, on investor side. Most of investors come from Western Europe. Loan supply side come from 24 different countries. So we are definitely paying attention to what happens in the Baltics, but it's just like one part of the business. So if we are in 24 different countries, then 3 Baltic countries is just like 3 out of 24 countries.
Yeah, I think that goes to the next question, because the next question would be from Katja and the countries you are invested in. But I think in the case of Mintos, because it's a general question, there are a lot of countries. We wouldn't finish the interview in 1 hour, maybe. But maybe you can say something general or something about it.
Everything from South America, Colombia, Mexico, to Europe, Spain, Denmark, Sweden, Baltics, Czech Republic, south of Europe, Romania, Bulgaria, Africa, up to the right in the east. So we have Kazakhstan, Georgia, Armenia. So it's a bunch of countries. So today we are 24 different countries, I guess.
Yeah. Okay, then maybe we go to the next question. We already had this in another question, I think. How does the due diligence work? What are the main criteria for adding an originator to the portfolio?
We covered that.
Yeah, we covered it. But the next question is very detailed and a little bit critic, of course, but it's also part of the interview. Why was Eurocent added to the portfolio, and went something wrong in the due diligence?
I wouldn't say so. So basically, obviously, we made the best decision at the time with the information we had at that time, and it was an established loan originator and it went through all the checks. So we did all the reference checks, everything, checked the company and so forth. The thing which we, the Eurozone didn't expect, and of course we didn't expect as well, is that they had a refinancing of their funding sources, and they couldn't find. They had somebody who they thought that going to do the refinancing, which basically withdrew, and they couldn't find somebody else to fill the gap, and that was unfortunate circumstance which came together, combined with the fact that there were changing Polish kind of regulations, and it's basically just many things, as always in those cases, coming together. I mean, Eurocent, when we connected, they were doing very good. It's been around for 15 years, and we didn't have any reason to believe that they could go in such difficulties that they experience now.
Okay, so
obviously after that, so we learned from those things. So we have improved even further our due diligence process. So we pay extra attention to those events where they have to refinance the funding sources. But I mean, that's part of I mean, obviously some of the loaners are going to go bankrupt someday.
Okay, so just to explain to the viewers, because there are different knowledge, of course, because some are members of groups that are very active, but some may find this video and say, okay, what was wrong with Eurocent? They don't even know the loan originator maybe. So the problem was that it went bankrupt, of course. Yeah. But it's bankrupt right now, I think.
It's going through the. It's not bankrupt, so they stopped issuing loans, and now they're going through the process of either restarting the operations or just doing a proper bankruptcy procedure. Of course, investors still hold the underlying loans, so the investors, the borrowers still owe the money to investors, and now the borrowers are still making payments to the Eurocent. But the question is how, because of the liquidator coming in the game, so you have to. They are basically deciding on the next actions for the company. So we have to coordinate our actions with the liquidator. Okay,
so maybe to make a summary of it. It's at the court at the moment, but I was lucky. I had no investments in Eurocent, but the borrowers pay back right now, so the investors still receive money, I think.
The money is the money which is paid by the borrowers now sits with the Eurocent. So
okay.
We are working with the liquidator so that we can get that money to the investors. It's a relatively small portfolio, so all in all, I think it's about like 200,000 euros spread across many different investors. But still, we obviously are involved in the process and work closely with the team in Eurocent, which has been very actually helpful, and they sort of understand the situation, and they are there to do their best to serve the investors as well.
So Mintos takes care of a lot of this, I think, and is behind
the scenes, like a lot is happening. So obviously we take very seriously what we do, and we put ourselves in the shoes of investors, and we're doing our best to protect our investors. Okay,
great. So okay, I think this question we already did. Yeah, maybe one more question always is about is what happens if Mintos goes bankrupt? What happens to the investors?
Yeah. So investors will continue to hold the claim rights toward the respective borrowers. So the borrowers are going to continue owing money to the investors. So if Mintos would go bankrupt, so the question is how you get this money, which is borrowers how you get it from the borrowers to investors. So there are many different ways to go about it. So, but in general, the easiest would be that the loan originators are making the payments, because loan originators collect the payments from the borrowers, and then we give the information to the investor, to the loan originator, so that they can make
direct distribution to the investors. Yeah, I think so too. Yeah. Okay.
Or you can always. I mean, it also depends on the bailiff or liquidator, who also can manage the process of distributing the payments.
I see, and one also critical question, of course, always asked is the question about Ponzi scheme. P2P a Ponzi scheme? What do you answer if somebody comes up with this topic?
Well, I think it's a very, I mean, at the end of the day, it's like super transparent process. So every investor can see, all the loan originators. They've been in the business for like many years, established companies, and as Mintos we take transparency very seriously and build the credibility, and those usually I just think are kind of unsubstantiated claims about any of those things.
Perfect. Yeah, I really love the platform, of course. Yeah, I'm really happy to be here, and I'm really happy to be an investor. But beside the P2P platform, maybe investors also want to diversify. Are there any other platforms in the P2B, P2P you would recommend to the investors?
I think we leave it to investors to decide. So we are doing our best job to provide the best service, and we are glad to have you here. In general, talk to investors and take their feedback and do our best to provide the best service. And then it's for investors to decide what other platforms they might want to use.
Great. Of course, we do not give any investment advices here, but everybody has to make his own decisions. But maybe some viewers might be interested how you are mainly invested. So on your own, I mean, it's not only from the P2P on real estate, stock market. So you are, of course, the CEO of Mintos, so they might be interested in it.
Yeah, well, I made an investment in education, so I'm still paying off my student debt. So I invested in education, but. Apart from that, obviously, what I think about investment and some of the investments, small investments I make, and in general, without going too much in like investment advice, so the best is diversification. Diversification is the best tool to mitigate any risks, and it goes from a top level, from top to bottom. So starting with a very diversified sort of asset allocation in general, and then within those assets also diversify. And this is where I think like Mintos we can provide a lot of value, because investors with a few clicks actually can diversify super massively across so different countries, loans and borrowers. Okay, great. So I think we are through the interview. Maybe some viewers want to sign in right now. I will put the link in the description, so it will be an affiliate link, of course, and you can sign in with this, of course, to the platform. Then I would say thank you so much for your time. Really appreciate it, and also the goodbye to our viewers. Thank you for watching. I hope there was some information for you. Goodbye. Okay. Bye bye.
Okay.